experts have revealed why Tesla is a dangerous stock, and we'll touch more on this in today's video. Tesla's stock has always climbed against the tide of pessimism, with the belief that the CEO Elon Musk couldn't possibly do what he's doing. However, just about 3% of shares are now owned short. Short selling entails borrowing shares from other investors beforehand. The shares can then be sold by that party, but must be repurchased by the short seller at a later date and then returned to the original owner who lent them. This basically means a lot of people are betting against Tesla, and with good reason too. What makes Tesla a dangerous stock? Why are people betting against the electric vehicle brand? Keep watching to find out. Tesla's CEO Elon Musk has long referred to the company as a technology firm, but it's still a manufacturer. Supply chains are necessary for manufacturers. Supply chains are being disrupted all around the world. Pandemics and war are fundamentally disruptive events. Both are harmful to economies and other living beings in general. But some say Tesla is teetering on the verge of collapsing. It's true that scaling, especially in this sort of business, is a challenge. After the initial scale, it doesn't get much simpler, at least for autos. In addition, Tesla has been pursued by the electric vehicle posse for years, and they're getting closer. Rivian and Lucid Group are providing electric cars that resemble Tesla's. Ford Motor Company has followed suit. Volkswagen is also increasing output. Chinese businesses are now strong enough to survive with less government assistance. Experts say Tesla needs to grow faster than General Motors or Ford in the next few years to justify its present valuation. It will benefit from the opening of its Berlin and Austin factory. However, with the amount of time and work involved in ramping up production, it's a bit hard to believe that last year's 83% increase in car deliveries can be repeated. The premise of most positive projections is that Tesla, like Apple, will multiply the value of each Tesla sale through its software, electricity insurance, and services. However, automobiles still account for about 90% of Tesla's income. Tesla isn't a solar panel manufacturer either. In 2021, revenue from battery storage declined by 38%. That isn't to suggest Tesla hasn't been successful. Yes, it has. On the other hand, its stock price assumes that it will be able to continue its existing growth rate even if electric vehicle production accelerates elsewhere. Last year, we saw this with cloud stocks. The willingness of people to pay for growth has a limit. Tesla looks to have shattered that barrier with lightning speed. This isn't to say that Tesla is a horrible business. We believe it can easily increase its top line by 50% this year while being profitable. However, after then, growth may be slow. Big numbers are more difficult to change. As a result, Tesla's once promised income diversification isn't materializing. Even if you estimate that Tesla stock is worth 10 times current revenue, or that its profit can quadruple and it's worth 30 times that, you're still looking at a significant reduction in the stock price. Connor Allen, a Fool.com contributor, examined what's really driving the electric car company's stratospheric value, and his views are a tad skeptical but well-founded, in line with our previous explanations. According to Connor, Netflix is an excellent analogy. When comparing the two, if Netflix just sticks to streaming, their stock would most likely continue to fall. They'll have to come up with something else. However, if you look at Tesla as a car company, they're the most overvalued car company in the world's history. What is the potential of everything else they're doing priced in? Some argue that Tesla is cheap because of all of this potential. For the most part, Connor says he'll believe it when he sees it, and he's quite right. Most positive projections of the company and stock are based on futuristic events, things that are to come. Just think about all the new technology that Elon Musk talks about. Elon and Tesla are quite prone to grand exaggerations, and it's something that's consistent with the brand. Case in point, FSD and the Cybertruck. However, if you're a regular on this channel, you'd know we have a more optimistic outlook. So while Tesla stock is indeed a dangerous bet, it's one that we believe will and has had high rewards. Tesla's stock has had an incredible run over the last 2 years, with $53.8 billion in revenue and a market valuation of $900 billion at the time of filming this video. Experts frequently consider Tesla to be an expensive stock. However, as gas costs continue to increase, we believe public opinion will undergo a paradigm shift. With Russia producing the most crude oil, the key ingredient in gasoline, throughout the war, gas prices are likely to remain high for much longer than previously predicted. Tesla automobiles are, of course, expensive. Gas prices, on the other hand, pile up over time. For individuals who live in rural areas of the United States, where cars are nearly a necessity, gas prices have been even more of a burden. Without a drop in gas prices, consumers may find Tesla automobiles to be more cost-effective in the long run. From a traditional standpoint, Tesla is still overvalued. However, the stock is more than just its earnings and market capitalization. Although Tesla has been fundamentally overvalued for nearly a decade, it has continued to rise. In a nutshell, traditional measurements appear to be ineffective for Tesla. Furthermore, Tesla's revenue growth has been excellent, and the company is slowly but steadily closing the gap between its market cap and revenue. So do we believe Tesla is a dangerous stock? Very much so. It's still important to realize that the market is quite volatile. If the current global scenario results in a recession, Tesla will undoubtedly fall along with the rest of the market. Gas prices can be dragged down by a recession, as they were in 2008. Because of the market's uncertainties, Tesla's stock is a risky investment in the short term. However, even in the event of a recession, we remain optimistic that Tesla will rebound in the long run. If a recession does not come in the near future, rising gas prices and soaring sales would certainly cause the stock to reverse course. Tesla has been rapidly expanding, and in a world where governments are transitioning toward renewable energy, it's not unreasonable to expect Tesla to rise in value. In March, the business commenced manufacturing and delivery from its Berlin facility, and in April, it began production and delivery from its Texas factory. The two new facilities will relieve strain on Tesla's Shanghai facility, allowing the company to better manage supply chain issues as well as the worldwide semiconductor, material, and battery shortfall than its competitors. Tesla announced in a recent investor presentation that it had begun deliveries of the Model Y crossover SUV from its Texas and Germany factories, while also attempting to bring battery cell manufacture in-house and diversify its supply chain and procurement process. As a result, the new Giga Texas production technology, the Model Y structure, has been streamlined. Tesla has deleted over 1,600 welds and drastically increased the Model Y structure when compared to the current Model 3. Tesla clarified the improvements during its earnings call. They also stated, in comparison to Shanghai, they should be able to ramp up manufacturing in Texas and Berlin faster because they have learned so much. Tesla was one of the first companies to take electric vehicles seriously. Even now, Tesla has essentially controlled the electric vehicle sector with relatively little change from its main competitors. Tesla also offers some of the most advanced self-driving technologies and one of the lowest maintenance expenses of any car. Contrary to what skeptics might think, they're effectively doing to electric vehicles what Apple did to phones, charging a premium for user-friendliness. In the long run, Tesla's competitors will surely catch up. However, given its popularity, Tesla will continue to capture a major part of the electric vehicle sales. It's also worth noting that Tesla isn't just an electric vehicle manufacturer. It makes a variety of revenue-generating energy products, such as solar roofs and storage or charging systems. They will surely benefit from the world's shift to renewable energy sources. We feel the stock has the potential to make a lot of money in the long run. Making large trades in the current unsettled market is still quite dangerous and should be avoided in the short run. As a result, we think that anyone looking to buy Tesla stock should not do so with substantial sums of money. In conclusion, we feel that Tesla will be there for a long time, but there's a chance that the company might not meet our expectations. But it's like they say, the greater the risk, the greater the reward. Are you betting on or against Tesla? Comment down below.